In this video, I want to actually unpack what the difference is between a mortgage broker versus a financial advisor. Okay, my name is Ash Borland. Before we go any further, I'm a mortgage business coach and I help mortgage brokers simplify success. And I create content from helping them get into the industry all the way through to scaling up to multiple six figures or even seven figures as a mortgage broker business owner. Now, this specific question here is very much tailored to people who are thinking about getting into the industry and they want to know the difference between what is a mortgage broker, what is a financial advisor, because these things are different and actually they're not the same, and people do sometimes refer to them as the same, and you'll hear mortgage brokers say I'm becoming a financial advisor, and that's not true. We need to make sure that you understand that. And then we'll also hear people say they need to speak to their financial advisor, and actually what they actually need is a mortgage broker. And so I want to talk to you just a little bit, just top level overview of how this works, what they are, what the differences in them are, so you can understand what type of qualifications potentially you might need to get, or which type of one might be right for you in order to go down as a career. So let's talk first about the mortgage broker's role. So a mortgage broker, they do things such as loan shopping, application assistance, negotiation, and insurance advice. So let me break those down for you in a bit more detail. So the first thing we've got is this idea of loan shopping. So your job as a mortgage broker, if that's what you choose to be, is to go and to source the market to find the best mortgage or mortgage loan for your client. And that's what you're pretty much fundamentally is your main job. So as a broker, you are just going to source the market to find the best deal for your client. The other one we looked at there was application assistance. So an application assistance is effectively you're going to help these clients apply for that mortgage. So that might be some hand holding. You might be guiding them through paperwork. You'll be telling them what they need, how to prepare that and how to package that, and guide them through the process. And this is what often separates a mortgage broker from a bank advisor, because you are going to help them in that, whereas a bank will say, off you go, and leave you to it. So this is a big key difference, is application assistance. That brought us on to the third point we had, which was negotiation. Now, negotiation is that you will sometimes negotiate with lenders in order to try and get your client onto that favorable rate, where potentially the criteria might be a little bit lax. That is possible on not normally high street lenders, but is possible on some of the other lenders out there. And you can also, depending on your experience, mortgage brokers can actually get into the negotiations phase of negotiating on a property for their clients. This is something that some of these more home buyer specialist brokers get into. That was actually what I did when I was a broker. I very much got into the weeds of helping them, guiding them through how to actually be a broker. Sorry, not be a broker, you guys, how to actually offer on a house. And sometimes I'd even make the offers for my clients if they really wanted me to. So you can go that far. And then you also have insurance advice. So a mortgage broker will be in charge and in part of their job of giving advice to their clients about insurance. So these are things like life insurance, critical illness cover, income protection, as well as things like buildings and contents. So you will speak to them about that, which can be awkward conversations to have, obviously, because it's not the nicest of topics, but it's also very important. And that's where you can give more of a broad financial advice, but it's still, again, around having a mortgage and having the debt that you have that comes with a mortgage and how you protect that. Now let's look at a financial advisor's role. So in a financial advisor role, they're going to be looking at investment advice. You're going to be looking at retirement planning, and there is going to be some insurance in there and also some estate planning. So those are the three things that a financial advisor would typically look at. So let's break those down a little bit more in this video. So investment advice. Fundamentally, investment and retirement is what a financial advisor is going to do predominantly in their day-to-day job. And there's so many little different remits into this. And as I said, this is not a video on what does a financial advisor do deep in, or same with mortgages, but it's just understanding the two. A financial advisor is going to look at how to create good returns on your investment for you. So that, as I said, it's an investment advice, stocks and shares, different index funds, all of these different things, which, by the way, if you're studying your CMAP, it's a lot of the stuff that goes on in CMAP 1, which is irrelevant to 99.9% of what you do as a mortgage broker, is very relevant to a financial advisor and how they work. The taxations, all of these things, very relevant to financial advice as opposed to just mortgage advice. So they're going to help with investment advice. They're also going to help, like I said, with retirement. Now, retirement is a big one. They're going that they can take pension funds from all different employees and all of that stuff and put them all together and get you a much better retirement package potentially. And if they do it early enough, again, this is not my wheelhouse, but if they do it early enough and catch you early enough, they can make you actually retire and have the retirement you want. So very much retirement planning is at the forefront of a lot of my clients who are in this space. It is very different to a mortgage advisor's role. It's also much, much harder, by the way, much harder, significantly harder. We'll talk about that in a minute. And then the other thing, we talk about insurance and estate planning. So a financial advisor will still give advice on insurance just like everybody else. So they will still have access to all those products, those income protections, those life insurance, critical illness, but they don't often sell them as much because it's not tied to the mortgage in the same way. But they might sell different types of policies, so whole of life policies and things like that, which are more built around the actual financial protection of the entire investment. There's a lot more intricacies to it, but one thing they might do more is the estate planning. So estate planning is, where does your property go to? Where does your assets go to when you were to pass away? Your inheritance, all of this stuff is a financial advisor's wheelhouse. They're very good at that, or they are very connected to people who are going to be able to refer you, so such as estate planners, because there's a whole different thing being an estate planner, but they can help you in those areas. So I think the key fundamental difference between the two is, and I'll break down differences as well, but other things, but the key one I would say is that a mortgage advisor is about debt. It's about debt management. It's about getting you into debt to buy the house that you want. And it's about everything that comes around that debt. So it's debt. Whereas a financial advisor, it's all about wealth. So they are building wealth. They are building assets. Mortgage advisors are not doing that. They are putting you in debt to achieve a desired outcome. Doesn't mean they themselves negatively are putting you in debt, but it's the best way I can describe it, because this is how it was described to me when I worked in a financial planning firm, which did the whole lot. We did everything. Was that the guy that ran the company, who was a complete, fully fledged financial planner in all areas, he said that's how the best way to split them. And I think that is a great way to put it. So one is wealth, one is debt. Now, I want to talk a little bit, though, about the regulation in the UK around these things. So there is a lot of different things we need to consider, stuff like the FCA regulation, we've got the qualification requirements, we've got the conduct standards and compliance monitoring, and they're all very different for the two roles. So as a mortgage broker, you're required to get your CMAP or your I think it's a certificate in mortgage advice, which is CF1 and CF6, or RO1 and CF6. As a fully fledged financial advisor, you have to go through your entire RO1 diploma, or your RO diploma. So it's RO1, RO2, and it's very intricate. So there's a lot more qualifications required to become a financial advisor, a lot more. And your CMAP isn't equivalent. The reason, by the way, why I have my exams with CII, which is the CF1, well, it's RO1 and CF6. The reason I have those is because I wanted that opportunity, if I wanted to in the future, to be able to go and be a financial planner and a fully fledged financial advice, if that was what I wanted, because that was my dad went into, and that's what he did for a while. So it was one of those scenarios for me where I was like, if I'm going to do the exam, so if you're thinking about doing your CMAP exam, I'd go down the CII route where possible, because then you can build on that and continue to do your exams. Obviously, it's absolutely fine. If not, you just take the exams again. It's no big deal. But that is one of the things to consider, because they are different. Now, from a compliance point of view, by the way, massively different in compliance, because they are so much more strict in wealth, so much more strict as a financial advisor, because you're dealing with ongoing recurring revenue. You're dealing with people's money. You're working with them ongoing, as opposed to with mortgages, which is incredibly transactional. So the compliance, the monitoring and everything else, significantly higher than what you would expect in mortgages. And I think that's probably one of the biggest things we need to point out, is that the difference between wealth and mortgages is very much in the type of business you build. Wealth is a recurring revenue and can be sold at the end of the journey. So at the end of the journey, you have your clients, you can sell them on. I've had a client of mine recently who sold his wealth book for well over 7 figures. And that was a client who, he was a mortgage broker, he moved into wealth, he built that up, and then he's retired now. He's in the midst of retiring, and sold his business, his wealth book, and has had massive success in doing that. And so this is something that you can do. You can build true business value and recurring revenue as a wealth advisor. It's much, much harder to do that as a mortgage broker, but you can make a lot of money much faster as a mortgage broker, especially if you're selling insurance. So there are two fundamental differences. That is the basic overview of the difference between a mortgage broker and a financial advisor if you're thinking about getting into the industry. Obviously, there's way more than that, and there's so much more deeper stuff than that. And I've got people on my podcast who have interviewed about this stuff, going really deep into it. But I just wanted to give you a basic overview as to how it stands as of right now. If you've got any questions, then please do leave them in the comments. I'm happy to answer any questions you have. I'll do a video on them if it's good enough. And if you have a question you want to send me direct, then head over to Ash Borland on Instagram and you can drop me a DM there as well. And I'm happy to answer that too. And I'll see you in the next one.